Okay, well, welcome everybody. If you're watching on Facebook, welcome. And some of you may be watching on YouTube. Don't forget to like and subscribe, all that kind of stuff, no matter where you're coming from. And if you're here on Zoom, I can see you. Let's begin by taking a look at the charts, and they are a bit wild, or have been. So I'll show you a few things that I'm seeing. And I say they're a bit wild, mostly because of today. It's crazy, but I will also show you, we've had this long string of yellow, so we'll investigate that a little bit. But, you know, the things I've been watching, and I talked about this last time, I was trying to see when was our last call, was the 27th. So it would have been this red bar right here. And you see, if I'll extend this, yellow section here a little bit. We'll change it. We'll move this to, I'll say today, which isn't working. So I'll pick a date, which is today's the 10th. And then also this one. And you can kind of see, it's very interesting how these ranges that have been historically interesting, you know, continue to come into play. So from our last call, we kind of went up, you know, hit some resistance in this range, came down, hit some support in this range, and here we are back again. This is a big bar, and this is, and we also have some, you know, event news going on with the end of the midterm election, positive CPI report. There's been some things that have gone on news-wise. It would not surprise me to see us go above this and then come back down, and this yellow then becomes support. You know, I have no idea if that's going to happen, but that would not be a shocking thing to see us do something like this, and then maybe back like this, and then, you know, if things continue to be positive, we do something like that. I mean, that wouldn't surprise me. I can't say that's going to happen for sure, but the way things are looking. The other thing is that we've kind of knocked on this door once already, and historically, again, what I see is the more often you come up to a spot like that and test it, the more likely you eventually go through it. So in other words, normally these areas of support and resistance don't hold forever. They're not going to be, I mean, sometimes you'll see rare circumstances where a resistance or a support will hold for 3, 4, or 5 times, but not usually. So, you know, and we've got such a convincing day. I mean, look at this. We're up 4.6%. I don't know if you remember any of the stats I showed in the past, but a 4% move in the SPX is, I don't want to say it's unheard of, but it's a once every, you know, couple year event. You know, it just doesn't happen very often. And you know, we're kind of in volatile times, so this would be the time to see it. The one thing, so I had a gentleman was messaging me this morning and asking me about this, and, you know, have we turned the corner? Is the bottom in? Are we now going to go into a bull market? Of course, I don't know. I have no idea. But the thing I reminded him is the most powerful rallies, the biggest up days, happen in bear markets. People forget that. You go back and look, you know, go back and look and see where you see the big green bars. Look, here's one right here. And they frequently happen in bear markets. So we may very well have the bottom in. And one of the interesting things is, if you remember, I shared this, you know, the whole idea of the number of new highs and new lows. We have a double bottom here, and we did have divergence on the, I'll pull that up for you real quick. Well, we can use this one. It's not the preferred, but what I want to go to is right here, this area. It's very hard to see, but we have this double bottom, and you can't really see it because the new highs and new lows are it's kind of, it's fuzzy because it's behind this red area, but we had divergence, in other words, and what I mean by that is we had less new lows when we hit here. So we hit the same number on price, but it was made up of fewer stocks from the New York Stock Exchange. So we didn't have a whole bunch of new ones making new lows. We had less. So we did have the kind of divergence that we like to see, that I shared with you a couple weeks ago about this. And I've got the wrong indicator on there, but anyway, hopefully you get the idea, is that when the market moves, it moves because the stocks within the index move, right? So here we have the S&P 500. How come it goes up or down? Well, it goes up or down because there's 500 stocks going up or down, more of them going up or more of them going down than are going the other way. And so when you hit a number like, when you hit the same price twice, but it's made up of fewer stocks going down, that's generally a positive sign. So, and I shared a whole bunch of historical examples all the way back to 2015, I think, where this has happened, where we've had a double bottom, but we didn't have as many new lows. That happened right here. Maybe that means the bottom's in. I'm still going to be cautious. I'll still follow the EWS signals, but there is that. So that's one thing. I mean, we're continuing to see these areas of support and resistance that are significant. We've got a really significant move today, again, coupled with some big news. The thing that's interesting to me is we've had this long stretch, regardless of what I would call uncertainty. None of that surprised me up until yesterday, because when you're going into an election, the market, there's certain things it likes and doesn't like. For example, markets really like a mixed Congress. Why do they like a mixed Congress? Well, because it's hard to get new things passed. So what that means is I'm probably not going to have any new big tax consequences. I'm probably not going to have any new big spending. I'm probably not going to have any, we're going to be sort of status quo for a while. Well, markets like that. Markets don't like uncertainty. So I think that's why you're seeing what you're seeing today, in conjunction with some good reports that came out. But what we're seeing is probably a mixed Congress, and if not, even if the Republicans win the House and the Senate, they're going to win the House for sure. Maybe they'll win the Senate, maybe they won't. But then we have a Democratic president who can veto things. So we're not likely to pass any big legislation that's going to change things significantly for these 500 companies. And the markets really like that. They like to know what's going on. They like certainty. So I think that's kind of what we're seeing. And I think that's why we saw all this uncertainty, all these yellow signals. And so I went and looked kind of under the covers, and what we saw these last few couple weeks is a lot of short-term put activity. And I'll show you an example. If I look at the VIX futures, for example, people buy options on the VIX futures. I'll look at the short term, the 9-day. And you'll see what I mean here is we kind of came up and we stayed in this area, which is kind of historically high. I mean, you can see it's kind of in the high range for all this time. The medium range would be maybe in here somewhere. And then today, in one day, we dropped way down. And so if this trend continues even a little bit, even if we just stay in this area, which I would say is, somewhat normal, maybe even still slightly high, what's going to happen is this, we're sort of on the cusp, but this last, all right, what have I done? I go back to ES. We're going to get a green signal on the EWS is what's going to happen, because we're actually very close to it right now. There's not really any big volume in selling. This uncertainty is indicated by short-term put activity, which eased up substantially. The chart I just showed you kind of shows that. it's eased up substantially post-election. So I think we're going to probably go back to a green signal. We've got, all those things happening. The other one that we've watched, the other chart that we've watched, and I like to keep an eye on, is the weekly advanced decline line. We've talked about this one before as well. And one of the things that's very interesting about this, the weekly advanced decline line, so now these bars all represent weeks, not days. Normally, when you'll see when it goes red, when it goes below its moving average, when it goes above, it usually stays there for a long period of time, meaning it kind of signifies a nice run up, usually. Here you have, again, it dips into the red. You see a little pretty significant pullback. It goes green, it stays green for a long time. Same thing here. This is actually COVID. It went red, and then once it went green, it stayed green for a couple years, right? So we did have, and this does happen rarely. I mean, if I go back 20 years, I can only find maybe 2 occasions where this has happened, where it went above green and then came back down, where we had some choppiness. It's very rare. So what I see here is we're just turning green. We may be going back above the moving average. That's a pretty positive sign. You might wonder what we're looking at. What is this advanced decline line? If you don't remember that one, if you're not familiar, what we're saying is this is the number of stocks that went up versus the number of stocks that went down. How many advanced versus how many declined. And what we do is what this metric does is it looks at that, looks at all of the stocks. In this case, you'll see I have it set for New York Stock Exchange. It's looking at all the stocks on the New York Stock Exchange, so thousands of companies, and it's saying how many went up versus how many went down. And then it just keeps a cumulative number average. And I have it set, I have the moving average, the gray line is set for a 50-day moving average. So, all right. There we go. So anyway, this, to me is another, I'm going to say potentially bullish sign. And I say potentially because we're just flirting with the line. And it, if I go back, let me go back to daily here. Same thing with this yellow right here. I know you can't tell by looking at it, but if I go look, at the numbers inside of the algorithm, it's also just flirting with the line. So about to go green. So, to me, that's kind of positive. We'll see what happens. And that's why I say all that stuff combined with where we are and how strong a move we had up, wouldn't surprise me at all to see a little more follow through, probably a pullback, which we always have, and we'll see if we're off to the races or not. One of the other things I mentioned a couple of weeks ago is it's very common to see a really nice bull run the year after midterm elections. So, we've got our midterm elections over now, and historically those are bad years. Well, here we are. And historically the year after is quite good. So, I think the last 50 years, the year after the midterm elections, the average is about 16% for the S&P 500. That's a pretty enormous number considering the average is only about 10. So, yeah, so all those things, right? Got a whole bunch of things combined, and they all sort of seem to be pointing in the same direction. Of course, we could be wrong, and we'll be prepared to move if we are.